landmark initiative is expected to strengthen coordination among capital market stakeholders, drive investment and open new funding avenues for local businesses. We'll expand on this together with Chairperson of the Eswatini Capital Markets Association, Thabo Makakula. And later on the program, our in-house economist will break down the latest trends shaping global markets. But first, our business news. In our business news this afternoon, the Eswatini Biggest Braai is not just an event to raise funds for the elderly. It's a vibrant celebration of community, culture and local enterprise. The event provides a powerful platform for local businesses to showcase their wares and for companies, including SMEs, to exhibit their brands. This year, over 100 exhibitors participated, bringing energy, variety and innovation to the Braai grounds. The chairperson of Philan Maswati, Lutho Dlamini, emphasized the impact, stating with over 10,000 Maswati in attendance, businesses had a grand opportunity to shine at the country's biggest Braai held over the weekend.
The vendors were so privileged that we have over 10,000 buyers in one place there for the whole night. And we saw the economic development that was happening there. The Biggest Braai is targeting at us at the level and that is where we should really be seen coming in to support. And the big companies played a major role by educating us what they're doing, what services are there. Some are in training, others are in manufacturing. We now see it growing, and I think one thing I can tell you, anyone who has exhibited or got a stall, the following year definitely come back. They never say we are not coming back. So that's why we see the growth.
The government is on a mission to boost exports, a crucial driver of economic growth. Exports mean more jobs, more investment and a stronger economy for Eswatini. To encourage more companies to tap into global markets, the Eswatini Investment Promotion Authority is once again hosting the prestigious Eswatini National Export Excellence Awards. This initiative shines a spotlight on businesses that are taking Eswatini to the world and bringing foreign currency back home. Manager Export Trade Promotion, Tande Dlamini, shares more in these awards, which recognize the game changers of trade.
The categories that will be contended for this year are Exporter of the Year overall, like this one awards the exporter who was able to excel on all aspects that we look at. And then we have High Impact Exporter. This is an exporter who was able to impact most in terms of economic growth, in terms of society as a whole. And then we have the Best Exporter for Market Diversification. One of our mandates is to actually increase the diversification of Eswatini markets as well as products. That way we can, because our export basket is concentrated and it makes us vulnerable as a country to external shocks. So we want to recognize those that are putting efforts into diversifying their markets and diversifying their products. We also have the most innovative and versatile exporter. In this category, we are trying to look at those businesses that are improving their product quality or even the brand itself in the international world. They are upgrading and getting their products into international levels so that they are competitive. So we will be awarding those. We'll be awarding also the Best Emerging Exporter. This is an exporter who is fast growing, who is new into the export business so that they can be able to grow even further. We will also be looking at Best Exporter to the African continent. The African continent is open. We have the African Free Continental Free Trade Area, where Africa as a whole is opening up to itself. It's opening up among African countries. So we will be awarding those. We'll be also awarding Best Trade Agreement Utilization. We know that the country has entered into a number of agreements internationally, trade agreements that encourage or rather reduce trade barriers and tariffs. So we are able to trade at preferential trade terms. So we will be awarding those who are using those preferential agreements, those trade agreements, to actually export their products. We also will be awarding the MSME, the small businesses that are actually navigating the complexities of trade. We'll be awarding a Woman Exporter of the Year as well to encourage women participation in trade. We'll be awarding also the Youth Exporter. This way we're encouraging the youth to actually come and also contend. We encourage that the youth are a part of exports. It's not for the guys who are novice in the industry. It's also for the upcoming youth, young people. We will also be awarding the Trade Finance Support Initiative of the Year. This is a trade finance initiative that has helped businesses, that has supported businesses to actually increase or upscale their efforts, or even be able to access international markets. So we'll be recognizing that those trade finance instruments or those trade finance initiatives of the year. We'll also be awarding trade support initiative as a whole. This is support that is related to maybe information, training, advice. All privately owned businesses can apply. Run by either a citizen or a resident of Eswatini, and all legitimate exports between April 2023 to March 2025 are eligible.
On to this now. Business Eswatini is encouraging local companies to participate in the Eswatini National Export Excellence Awards hosted by the Eswatini Investment Promotion Authority. The awards aim to boost export participation among local businesses and recognize excellence in the export sector. Let's hear more from Business Eswatini's Chief Executive, Inati Dlamini.
To actually encourage local businesses not only to look at local markets but outside. Lately, we have the African Continental Free Trade Area, which has opened up huge markets to over 1.2 billion people. And then we have overseas markets that we can look into, and these awards help embolden businesses to be bold as to look outside. So therefore we're very, very much excited. But also another critical issue is that every time we export, we receive what you call foreign receipts. Foreign receipts help with our foreign exchange reserves in the country. And you will have noticed that in recent months, for instance, we have what you call a current account surplus, which means happily we've been exporting more than we are importing. That's a very ideal situation in which the country can find itself. And we want to continue on that line: export more, import less. Export more, import less. And the more you do that, then you have what you call a current account surplus.
That's all the business news I had for you. For now, we'll catch a break. When we come back, it'll be time for our Enterprise Watch.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Hi, I'm Golda. I work here at the IMF. Our aim is to provide the best possible advice on economic policy to our member countries, helping them to create conditions so everyone prospers from economic growth. One question our economists are always getting: how can we reduce poverty and foster inclusive growth? There are a few ways to think about it. Some say the government should be heavily involved in the economy, with regulations to keep people safe and high taxes that fund and support a healthy, well-educated and inclusive society, even if it's at the expense of higher growth. Others believe that the government should have little or no part to play in the economy. Lower taxation means more money in everyone's pockets. More individual freedom, they say, means more economic growth overall. But maybe there's a target we all could be shooting for: the best policies on inclusion and growth. Essentially, inclusive growth is about making the economic pie bigger and sharing those slices more widely. So, how do we get there? By aiming for a middle ground. Both sides mostly recognize the need for social safety nets, public pensions, unemployment insurance, food programs. These measures prevent extreme poverty and provide a basic standard of living. At the IMF, inclusive growth is central to our work because reducing poverty is in everyone's interest. Part of having a free and equitable society is ensuring we all benefit from its growth, no matter who we are. And it's not just about creating a fair and equal chance to succeed for individuals, regions, or countries. It's about distributing growth fairly for future generations too. Overall, inclusive growth is based on the idea that wealth creation, economic freedom, and equal opportunity can and should coexist.
Welcome back. You're still watching Market View. In our Enterprise Watch segment, the Eswatini Capital Markets Association was officially launched last week, a major step towards strengthening the country's financial sector. The association aims to promote growth, transparency and coordination among capital market players. ECMA is expected to work closely with the FSRA and the Eswatini Stock Exchange to facilitate the growth of listed companies and support new capital raising mechanisms for businesses. The launch comes at a time when there is a growing recognition of the role capital markets can play in mobilizing long-term funding for national development, infrastructure and private sector growth. But how exactly will this be done? To help us unpack this, we are now joined by the chairperson of the association, Thabo Makakula. A very good afternoon to you and welcome to the program. I'd like to start off basic. What is the Eswatini Capital Markets Association and why was it necessary to have it established now?
Thank you. Thank you for having me and good afternoon indeed. ECMA was established a while ago. We've just relaunched it to give it a bit more impetus. The idea around ECMA is just like you have a bankers association, an accountants association, and it's to have a lobbying base or a voice in the economy. So yes, we're a bit slow and we're not proud of that, but it's if you're going to do something like this, you must sort of try and do it with care and due care and bring on board all players. Otherwise, that's what's delayed us. You needed to make sure that all industry players have a buy-in and therefore they are sure that whatever you're going to do is going to add value to their process. So, yeah.
You say ECMA was established a while back, so it's been there,
yes,
except for the visibility hasn't been promising much. What were the barriers there?
The main barriers, like any new thing, is buy-in. For us, mainly, it was stakeholder buy-in. We wanted to be sure that whatever we are putting out there in the market, all our stakeholders seem to agree that there's reason. And timing is also very important. 10 years ago, we probably did not have as vibrant a need for capital as we do now. 10 years ago, we probably were still learning a lot of things about industry itself, and a lot of the players were still learning about capital markets, and were making fundamental learning experiences. So now, after 10 years, the child must begin to walk. And therefore, the economy as well is now demanding that we become more active.
Right.
Yes,
during the launch, it was said that ECMA is expected to be a collective voice for the industry. Now, that includes collaborating with the FSRA and the Eswatini Stock Exchange. Now, what's going to be the division of labor here? Who's going to regulate, who's going to lead, and who's going to drive mostly investor engagement?
Well, everyone plays their part to give us the right dish, and I think the regulator or the authority will continue doing their bit, but obviously now, whatever they do, we are there to also be involved in having an input in what they're doing. You will find that whether there was legislation or policy or anything like that that the regulator was even thinking about, they didn't have a collective body to speak to. And as a result, consultations were being done individually within the different players. Yet now we have a body that is ensuring that should any consultations be required by the authority or the regulator, they have a body to speak to that can then voice out views, opinions, and even maybe direction in which the regulator should implement. Now, that's just the FSRA. Now, with the stock exchange, we do believe that either as players or as the sector, we have not been vibrant enough in activating the stock exchange. Any economy that doesn't have a vibrant stock exchange, which is the inflow and outflow of cash, both within the economy and externally, has a big challenge. And for us, we are trying to make sure that the stock exchange plays its pivotal role of being an enabler of capital, especially external capital. Because if you want people to buy government bonds externally, they want to know that the exchange can take that money, disperse it accordingly, and also if they want to sell out, the exchange can facilitate that. Right now, there's too much red tape. If there's a fund in Taiwan or in the US that wants to be invested in the kingdom or buy a government bond, there'll always be the issue of how they actually do it. And we are saying if we liberalize and we bring the right technology or systems for the stock exchange, and which is what we are trying to lobby and push for, it will allow for us to bring in more capital. Yeah.
And what gaps or role will be played by ECMA that no other existing regulatory body is performing well right now?
Well, in the capital market space, it's really the fact that we also want to do self-policing. We also want to make sure that the stockbrokers, who are the ones that facilitate for the play of money within the economy, are regulated properly, both by self and the regulator. Also, the capital market players, which now have a bit more depth and understanding about what to do and experience, we are able as ECMA to then say, guys, let's rally behind this economy that we operate in. If there's stuff that we find are bottlenecks, we can then have a voice collectively to say, okay, no, government, regulator, or industry player, so and so, is it banks, is it the central bank? What is it that you need to do to assist us to unlock the value so that the flow of money within the system, especially for investments, is smoother and it doesn't have a lot of red tape.
All right, Mr. Makakula, I'm told that's all the time we have. Thank you very much for coming to our studios. That was Thabo Makakula, the chairperson of the Eswatini Capital Markets Association. Stay tuned. After this, we'll have our in-house economist, Sanele Sibia.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Nangiyobeleka bekunalomnyesi nje satholana lesibhedlela singadani ukuthi sibelekele umuntu munye.
Ngingasho ukuthi umntwana ngiyamehluleka ngomuzi. Sathi ngatomlahla.
Mina bengiphila impilo yokuhlala ngigijima ngaso sonke isikhathi ngikuba bede badala. Ngakumva nami ngitolala naye emapayipini kuNkulunkulu tosisiza.
Akabuyele emuva kakhulu ngemaciniso. Asunyanyana dala. Angithethi. Into wathi ngimdala. Akasudlala lo mntwana ngakho.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back. Moving on to our market analysis segment, we're joined by in-house economist Annelies Beer. Mr. Beer, glad to have you on the program with us. While the world digests the news of the U.S. signing a trade deal with the EU, a 15% tariff, how are markets reacting on that one?
Thank you, Story. So when you are looking at markets right now, we went into Friday and into the weekend before President Trump landed in Scotland. So the whole world was a bit worried about what's going to happen in terms of the tariffs. And, we didn't want an unfortunate trade war between the two largest trading partners in the globe, accounting for over 2/3 of global trade. So that framework till now, the fact that it's out there, markets are responding, but I'd say they're just taking it with a pinch of salt. Because when you look at the futures in the US, you realize that, it's not the reaction we would have expected following such a landmark deal. But when you look at the US, we can see that markets still closed relatively on high levels, with the Dow Jones Industrial Average losing that 45,000 footing back to 44,000 type of footing. But because we are going into a situation where this week we're expecting to hear from Jay Powell, the Federal Reserve Chair, and we also are waiting results to come through from the Magnificent Seven. That's your Microsoft, your Metas, and quite a lot of those. So markets are really not responding much to the trade deal in itself, because there is still a bit of issues to be ironed out there, more especially the issue around aluminium, the issue around, those automakers. So the reaction is there, but it's not the bullish type of reaction we have expected. If you go to Europe again, you realize that the FTSE 100 is somehow paring down on those on those gains that they had made last week. Because if you remember, last week we closed at around 9,300 type of mark, but now we are on 9,100. Same thing with the DAX. We were on 25,000 last week. It's only Paris that seems to be on an upward tick. That's because the deal in itself still leaves out the important nitty-gritties that markets want to look into. For example, the markets are looking into what's going to happen to those wines and those spirits into the US and out of the US. This still does not yet contain anything around those. There's still issues with the automakers in terms of whether 15% is going to be effective for them or not. So that's why we're seeing markets reacting, but not the reaction we quite expected. We would have expected, numbers to jump into the 94,000 to the 9400s in London. Frankfurt would expect them to get to that 26,000 or at least up at 25,000, and Paris would expect them to at least get back to that 8,000. But that's not the reaction we are seeing. So we're just waiting to see as more economic data comes out this week and how things go. Okay. Into Asia again, when you go there, you'll see that the Nikkei is losing a bit of ground there, which is something we expected because, as those European automakers now get that phase that's still more or less the 15%, which the Japan also got. Now that means Japan-made more automobiles still have to compete with European automobiles at the same level. So there's a loss of that advantage. That's what we're seeing happening in Japan. But when you come into Asia, into the mainland, into Hong Kong, you'll see that the markets are remaining relatively upbeat there, purely because we're still waiting to see what deal we're going to see come out of China and the US, probably say on Wednesday or thereabout. We're expecting to see those talks and the fruition as we edge closer to August 1. In South Africa, markets remain relatively upbeat. Now we've seen those budget votes being passed, and we've also seen, the GNU holding. But, the pressure on those metals, those aluminiums, now that has dropped, pulled back the gains. Last week we did hit the 100,000 mark in the 134-year history of the JSE, but because of those issues to deal with those precious metals, still we're seeing a bit of setbacks there. And then when you come into Eswatini, we've not seen any change. But when you go into the commodities, again, gold is telling of the story that we are talking about. If you see gold is, performing like last there at 333.7 per ounce. That's because we're seeing investors trying to shift into other equities now, but the shift is not as vigorous as we would have wanted it, because we would have seen a spike down in the price of gold there, but it's not the movement we're seeing because there's still a lot of thorny issues to be polished out in the trade framework. And then Brent crude speaking up because that we've avoided a trade war between Europe and the US, so we do expect demand to stabilize. When you come into the currencies, you realize that the Lilangeni has somehow stabilized against the euro, but we're losing a bit of ground against the dollar, and we should expect that as we get more and more deals to come, while we still have nothing around South Africa. We're also seeing a bit of weaknesses against the Japanese yen happening today. Thank you.
Thank you very much, Mr. Spear. And with that market analysis, we've come to the end of our show today. From myself and the team, until next time, thank you for staying with us. Take care.